A lot is riding literally for Tesla investors on what happens when Tesla launches a paid robotaxi program in Austin. We've got some new research to share with you today that might just surprise you. What percentage of people would even consider taking a self-driving taxi? When Waymo launched in Austin, what happened to Uber and Lyft? Recent surveys show for some reason the public seems to be skeptical about Tesla's upcoming robotaxi. And we've got actual rider experience in Austin that shows what people are paying for right now. This tells us a little bit more what Tesla might end up charging there. We got Cern Basher here with us today. Cern is a chartered financial analyst who's currently running his own investment advisory firm called BrilliantAdvice, providing wealth management services. Welcome, Cern.
Hi, Herbert. Yeah, it appears like there might be more money in the rideshare business than we anticipated.
Is that right? Okay, well, we'll find out. I mean, what's really cool about this is you gather together a lot of research that people are now, digging up and getting out there and finding out more info about not only Waymo, but Uber and Lyft, and the survey of whether people want to get into rideshare and then what they think about Tesla. And then you took all that and you said, okay, well, given that, what could be the prices? What could Tesla do? That's really, really important here. So you have this post you have on your X account, Waymo plus Uber market dynamics as Tesla tests the robotaxi waters. Looks like it came from Altimeter Capital, and they shared a lot of their research, right? Tell us what we're going to read here.
It did, yeah. I thought this was an important post by Thomas Reiner at Altimeter, taking a look at some of the data from San Francisco, from Waymo's entry there and how that impacted Uber and Lyft, and then taking a look at some of the early results from Waymo's entry into the Austin market.
Specifically Austin, I'm very curious what we think might happen. And I think it's not just a straight one-to-one, just whatever happened in San Fran, it's going to happen in Austin, right? So let's take a look at this table. Yeah,
that's right. And also we should keep in mind that Waymo's entry into San Francisco is different than their entry into Austin. In the case of Austin, they're actually partnering with Waymo. So it's a little bit different, but still, I think there's some interesting tidbits of information here. So this chart's interesting because it shows from Waymo's entry to now, let's say, maybe it's 2 years, they have about a 25% or so market share over a 2-year period. Uber's at 55%, Lyft's at 20%. So, and there's kind of some stability perhaps over the last 6 months there. Waymo's market share there appears to be rising, but it's also dipped a couple of times.
Yeah. San Francisco initially started at 7%, 70%, now down to 55%. And then Waymo has a presence, but they didn't expand. Like they might only have 300 cars there, but clearly people will choose Waymo over Lyft, and even Uber was affected.
Now, it turns out that the pricing that Waymo is getting in San Francisco is quite a premium. And this chart shows that Waymo has about a 25% premium pricing in that market versus Uber and Lyft. But this may be unique to San Francisco. And he's saying here that there's a reason that Uber and Lyft and Airbnb and other companies focus on the Bay Area first, right? It's kind of a tech forward, disruption friendly market. So there's this data point here in the middle that when Waymo went to Phoenix, the denial rates were about 50% for an extended period after launch. So when people discovered that they were getting a Waymo, they denied it. Half of the people did. They didn't want to be in a driverless taxi. Now, again, some of this is part and parcel of just being early and people don't think that autonomous vehicles are safe. But San Francisco may be kind of a special place in that regard where people are more interested in autonomous vehicles than perhaps the rest of the country.
You said earlier, though, right, Cern, that it's different in San Fran versus Waymo and versus Austin. So in San Fran, Waymo just went in there and said, download our app and hail us when you want to. If you want an Uber, you go download their app and hail them. Yeah. But in Phoenix and in Austin, you download the Uber app and then you ask for a ride. And then if a Waymo is available, it pops up as, are you okay with a driverless car? And then in this case, 50% of Phoenix said, nope, don't want it. And what was it in San Fran? Much higher, right? But we don't know.
Yeah, we don't know the specific number. I think in San Fran, the acceptance of Waymos has been quite a bit higher, but again, we don't know the numbers, and it's also a different situation where Waymo's operating on their own. I don't know that they appear on the Uber platform in San Francisco.
They don't have that number. That's right.
Yeah.
Okay. So that's very interesting. So we'll see. What do you think in Austin? If you download an Uber app and you go, okay, and then so here's a Waymo. What do you think? Same as Phoenix?
Um, Good question. I don't necessarily on the surface of it see any reason for a big difference in Phoenix versus Austin. Austin probably also is kind of a tech forward market.
Yeah.
Maybe it's in the middle between Phoenix and San Francisco.
Mm.
Would be just my guess, but again, we don't know until we see the data. Um, it certainly seems like right now that Austin has kind of become ground zero for autonomous vehicles with Tesla's launch. Zoox, Waymo, all the players are there. So that may become kind of the most important market, at least for the next few months.
That's why we're doing this show. I want to find out what could happen in Austin.
Yeah.
Okay. What's next here? We got a table here.
Yeah. So in Thomas's post, he included some survey data from this EV intelligence report. Now, let me just say that I dug into this and I can't find out who's behind this organization.
Mm.
Some of the reporting, some of the information in the report seemed very, very biased against Tesla to me. That said, it was part of Thomas's post, so we'll cover it here. But just let me say that I would take this information with a heavy grain of salt. I'm very distrustful of consumer surveys anyway. They said that this was a survey of 8,000 people, but there wasn't really much information about how they conducted this, who conducted it, who paid for it. It's kind of the whole document, which is linked there at the bottom of the page, is kind of a puzzling document. But still, let's just accept for now that this particular survey is reasonable. I still think it's interesting to go through. So the question here was, would you consider taking a ride in an autonomous taxi, also known as self-driving taxi or robotaxi, right? And so 26% said, yes, I have not ridden in a self-driving taxi, but would consider it. Okay. 2% said that they had done it and would do it again. 1% said that they have ridden in a self-driving taxi, but would not do it again.
Mm.
Okay. And then 36% said, no, I'm not currently considered riding in a self-driving taxi. Well, probably not available to them. And then 35% said, no, I would never consider riding in a self-driving taxi.
Mm-hmm.
So I think this is partly reflective of people just don't understand what this is all about, how safe they are. It's a reflection perhaps of kind of the broader population.
This is a weird question or answer. No, I'm not currently considering. Right? What?
Yeah.
Are you considering riding? What does that mean? Are you considering riding in a self-driving taxi? I don't know what that means.
And the problem with this survey is we don't even know whether these people were in a place where they could ride in a self-driving taxi.
Like, would you consider taking a ride? Like, so would you consider? No, I'm not currently considering. What?
Yeah.
Yes, I would consider doing that. No, I would not consider do that. Or no, I would never consider doing that. Okay, well, that's a huge number, right? So that's 71% of people would not take a self-driving taxi. They didn't ask about price. They didn't ask about, like I said, availability. Yeah.
So in Thomas's post, again, he sort of uses this as potential evidence for a slow adoption for self-driving taxis. So fine, right?
Okay, gotcha.
Yeah. So then let's move to Austin. So how is Austin developing so far? Again, from Thomas, this is his work. So he's saying Austin being the true first greenfield expansion of the Waymo Uber tie-up, where Waymos are exclusively available through Uber's app. So it's a great case study for how this could extend to other geographies. So you can see there, because of that, they've gotten to 10% market share quicker than they did in LA, San Francisco, and Phoenix.
Right.
Which makes sense. As you're introducing newer markets, it should be quicker. But perhaps it's because of the tie-up with Uber and the access across Uber's app. So that part looks favorable for Waymo in terms of gaining market share fairly quickly. Okay. and that's within their operating zone. So it's not market share of Austin. It's just market share within Waymo's operating zone, which is pretty small. Okay. And then the interesting thing on pricing is that in Austin, the pricing premium for Waymo is quite a bit less than what they're getting in San Francisco. It's only about 2%. So this idea that Waymo's, a premium product and they should get 25% more pricing, I don't think can be extended from the San Francisco data. I think that's very unique to that particular market.
Do you know how much is Uber's take? This is the price that they charge. So how is it possible that in Austin they're going to charge the same amount as Uber, and then before they used to be on their own, charge even more? Now they're with a partner, Uber, and they're going to charge the same as Uber does, and so therefore, what is Uber's take on this?
Well, that's a very good point, right? So Waymo is not only earning less relative to Uber, they're also giving up a lot of that revenue to Uber. Whereas in San Francisco, they're earning more than Uber and not having to give any of the revenue to Uber. So yeah, this is an interesting situation for Waymo. How profitable is this business relationship? Yeah. It's certainly good for Uber. It helps them deal with kind of a hole in their lineup in terms of having autonomous vehicles.
Are you going to cover maybe later what you think Tesla's pricing will be?
Yes.
Okay.
Yeah. I'd like to give some thoughts about that. So then in the next page, if you look at the relative share, so in this case, Waymo and Uber together have been able to gain about 600, 800 basis points of market share at the expense of Lyft. So it seems to have helped both of them hurt one of their competitors. About 7% extra market share sitting there at the top. And that's compared to the market share 3 months prior to the launch. So, that for Waymo, for Uber, that's nice. They've gained that extra market share versus Lyft. It's business that they might have not otherwise had. But as we previously discussed, I question whether this is a really good way for Waymo to move forward. It seems like they might be giving quite a bit of revenue to Uber for this.
Also wonder how much marketing that they had to do. And it looks like that there was a price war. So it looks like that Lyft had to adjust, eat some price, cut prices to survive.
And they still lost market share.
Lyft has to undercut to just survive, right?
Yeah.
And then they lost market share, but then, I don't know how much maybe Waymo and Uber did a launch. And so they went out and started advertising like crazy.
Sure.
So they're, mind share.
And, as you know, too, that often a lot of times people have both apps. And so there might have been some deals that were offered or, well, I guess we saw on the pricing that necessarily Waymo and Uber weren't offering pricing deals. But yeah, so it's interesting to see how this settles out. And of course, adding Tesla into this mix will change things yet again.
Okay.
Yep. So Thomas goes on, he says the crux of the argument that Uber has been putting out there is around its value from demand generation, utilization, and the benefit of the hybrid network appears to be playing out in the early days of the Waymo plus Uber in Austin. Right. So the big question will be around what happens with Tesla's launch in a few days. Right. So he's saying here at the bottom, the biggest potential disruption that Tesla can provide is if they're able to enter the market at scale with a meaningfully lower average fare. So this is, again, what we've been talking about is the benefits of scale here should allow Tesla at some point to be able to undercut the competition. And we'll talk about their pricing strategy here in a minute.
Yeah. So let's just pause for a second, right? So here you have Austin, no Tesla yet. You've got Lyft and Uber. And then Uber said, okay, we're going to add a few 300 Waymos in a very specific geography. And every once in a while, you as a rider won't know. You just use the Uber, you order something, and it might go, oh, there's a Waymo. Are you okay with a self-driving car? And some of them will say yes, and then they get a ride. So it's almost like, it's not like the consumer did anything different. This is still an Uber versus Lyft scenario.
Yes.
Now, they did gain share, but I don't understand how. Like, how do they gain share when nobody said, I want a Waymo. Oh my God, I got to have the Waymo. And then I order it, because that's not how it works. You download
Well,
Uber, you order a ride, and Uber tells you whether or not they have a car for you.
one of the big factors I would guess in terms of gaining share is now they've got more vehicles on the road. Therefore, the availability, the wait time is lower than
There you go.
for Uber.
Yeah.
Right. So that would make them more appealing. Even if you paid more, if I'm only waiting 3 minutes as opposed to 15, I'm happy to pay the 2% or 5% more.
That's a very logical answer. I think that makes sense. I mean, I just, you know what I mean? Like, I don't understand that. It's not like Waymo became the driver of, I've got to have a driver's, as opposed to San Francisco. Clearly, you had to download the Waymo. You wanted to choose a self-driving car. And then you look at the prices and you choose, okay, I'm still going to pay for the higher price. Here, it's like, you don't even know what you're going to get. So what does that matter? Tesla's going to come out with their own app. So that's a lot of people think that that's a big deal. Got to download the app. But you want to experience a Tesla experience, and then, we'll see if it disrupts these guys. Yeah. Okay.
Yeah, Tesla might have to buy their way into the market, so to speak, in terms of offering really attractive prices to kind of buy some market share initially. But ultimately, their market share gains will be driven by their ability to scale. Just like we've seen here with Uber and the Waymo tie-up. Putting more vehicles on the road just allows you to gain more share, because you're now providing rides that are more available. You don't have to wait as long. That's a very significant component here.
Yeah. In order for Tesla to succeed, they need to have what their promise is. The promise is a self-driving car. And what's the promise of a self-driving car? Price.
Yeah.
Price has to be lower. And but it doesn't matter if you can't get availability in time. If I have to wait 20 minutes, 30 minutes, I may not choose that anymore.
No.
Most likely you won't. You want something to be available in 3 minutes. So only when you hit the 3-minute mark, plus you have a lower price, it's game over. But like a significant lower price. But if you don't, I just don't see the. So let's go through this table here. This is because this is Uber's strategy, right? Uber's saying to us that we have the best utilization and unit economics for AV fleets, so that AV fleets can go be partner with Uber. And if you only have 300 cars, great. People still order a car, and then we offer you if your car happens to be available. So there's none of this. Download the Waymo app, choose a Waymo, and then be pissed that there won't be one for an hour. So you don't, or it doesn't go in your geography. These guys kind of hide it. That's their strategy. And then they go, okay, I'm going to have you, Waymo. I'm going to have multiple other, other AV partners. And that's our strategy.
Yeah.
Okay.
So their whole value proposition here is this hybrid network, right, of autonomous and human drivers. Mm-hmm. This reminds me of the transition that we went through with Netflix and Blockbuster. In the early days, Blockbuster had the stores. People were used to returning videos to the stores. Netflix came along. They were a tiny, tiny, tiny little speck. They tried to do a deal with Blockbuster. Blockbuster laughed them out of the room. And then Netflix was lucky because Blockbuster didn't really go after them, because they didn't really see them as a threat until it was too late. And this is kind of the same issue with Uber and Waymo. In this case, they're tying up early. But in my opinion, Uber is tied up with the wrong partner. Waymo is not going to be able to scale compared to Tesla, and that's going to be their limiting factor.
But they don't have any other partner. So, the whole argument of Uber was, I've got a slide, and it's got like 8 partners that I'm going to partner with. They all offer AVs. No, they don't. They have like pilots, but they don't have it in numbers. Yeah. And even Waymo doesn't have it in numbers. So it's still kind of all fake. But, okay.
Well, they have to try something. I mean, kudos to them for, partnering and trying. That's their only hope at this point. If Tesla isn't willing to work with them or doesn't want to work with them, then Uber has to find other dance partners. Okay,
so the problem, though, is that it's not a done deal, right? So you've got human drivers on Uber, and then there's this new Tesla that's going to come and says it's Robotaxi. There's no one there. But in order to win, you need to convince consumers that it's safer. Its safety is number one. Yeah. Then price would be number 2, and then availability number 3. But if it's not safe and you can't convince people, then you lose. Right. Now, Waymo's been out there and they've convinced people, and you saw that they've won in San Francisco, or they're winning in San Francisco. Here they are in Austin, and they're doing, it's 10% market share pretty quick. And so theoretically, Tesla should be okay too. But here you're going to share us data points here that says consumers believe Tesla's unsafe.
Well, again, this is back to the survey, and I preface it by saying I think this survey is extremely biased. But nonetheless,
I think so too.
This is what Thomas included in his post, so let's
Okay,
just accept
fine.
it for now.
Yeah.
And so, yeah, the majority of consumers, according to the survey, believe Tesla FSD is unsafe, right? And he's saying, not sure how this breaks down on party lines, but there are extremists on both sides on Twitter and in the media around safety of Tesla FSD. Right. And so the survey is showing that 33% say Tesla FSD is very unsafe. Well, here's the question. Tesla has a technology in their cars called full self-driving. So they're, this tells me that they're talking to people who've probably never heard of this before, which means the car drives itself. Do you believe this technology is safe or unsafe? Well, if you've never heard of FSD before, of course you're going to say it's unsafe. Right? This sounds crazy. Cars can drive itself? Yeah. Very unsafe. Right? So that's a third of the people.
This is such a stupid question. It's like, okay.
Right. Yeah. Another 27% said somewhat unsafe. They weren't really quite sure how to answer. Some people said not familiar, don't have an opinion. That's 20%.
Yeah.
And then 16% said somewhat safe. So those are people that consider themselves somewhat informed, I suppose. And 4% said very safe.
Well, let's talk about this a little bit. Like, okay, are you saying that it would have been better if they said, are you aware of what Tesla FSD is? Have you used it? And then ask the question, do you believe the technology is safe or unsafe? And then would you later buy Robotaxi? But on the other side, this is the general consumer. It is the general consumer that you do need to say, hey, there's a Robotaxi called Tesla, and they don't know anything about it. They've never heard FSD before. So you have to convince them.
This could be the general consumer. Again, we don't have insight into their methodology here. Apparently, it was 8,000 people. Again, we don't know any more details than that. Mm-hmm. We don't know how it breaks down on party lines. We don't know really anything about them. But let's assume this is a good sample of the general population. Then this does show a little bit of an uphill battle in terms of perception around autonomous vehicles. But also, it's not surprising because it's a new technology. I mean, most people have just not heard of it yet. Mm-hmm. And like a lot of people that ride in a EV for the first time, they get that experience and suddenly they're converted. Same thing I think will happen here. Agreed. And the driver is going to be price. If you can take a rideshare vehicle and save a bunch of money, you are going to do it. If that's another option, people do that now. And assuming it's available, right? Like Lyft offers lower prices, but the wait times may not be any better.
Yeah, I also think that it's time, right? So is Waymo safe? I don't know. I've never been in one. But if you say Waymo's been here for over 2 years now, we've already had several million rides, and then you go, okay, it's not like this is new. It's not like I'm the first guinea pig. This has been around. People have been doing it. And then when I hear my friends, oh yeah, my friend just told me he took a Waymo one time. Then these things that's how it. Safety is a really big deal though, right? So that's why I do think it's not just try this product. It's a good blender. It's a great blender. Well, this one is like you want to know that this is safe, and so you're going to look for all these signs to signal that it's safe. So it might be a lot longer before more people. But the good news is that I don't think you need to have 100% of people knowing that you exist. You can just grow as you grow in terms of the the geography that you're offering it in. Like right today, if Tesla launches, which is where they are, Austin and in San Fran, a lot of people have already taken a Waymo at that point. That's especially if they've been there for 2 years. So it's like, Tesla has one, but I've already taken a Waymo. I know that these things are pretty solid. And
one of the challenges too with the Waymo is in some places it doesn't drive on the highway, so the driving time is a lot longer. Mm-hmm. So in a place like San Francisco, I think people are going to be much more interested in getting there as quickly as possible. And so if there's an opportunity to ride in an autonomous Tesla with no human driver, they're going to take that over the Waymo, perhaps even if the Tesla costs more. So, there's going to be some interesting dynamics at play here.
Okay.
Okay. Now, the next one is, according to this, 77% of consumers aren't open to using Tesla FSD,
Hmm.
right? And again, Tesla has a technology in their cars called full self-driving, which means the car drives itself. Are you open to considering riding in a Tesla using full self-driving? Right. And according to this, 77% of the people said no, or, they're not currently considering it. Uh, you know, and as Thomas says here, the wording on this one's a bit odd because it conflates using it yourself or merely riding in a vehicle using full self-driving. But he says it's still an extremely high percentage. So more problems with the survey, but still, directionally, I think there's a bit of an uphill battle here, right? But ultimately, I maintain that economics will win. That people ultimately care about how much they spend on transportation. If they can save a bunch of money, they're going to find this and they're going to save the money over time. The question is, how long does it take?
Look at this. Okay. 3% plus 1% is 4% of people have used Tesla full self-driving. So of the survey, 4% have used it.
Yeah.
And 3 to 1 say that I've used it and would do it again. So,
Yeah. Yeah.
Now, this thing about the 1% saying that, I have used it and would not do it again, you'll find out that it's the old version. I've got a friend,
Right.
several friends, my cousins, and they said, I told them, my wife told them, we drove all the way from Seattle to Vancouver to this restaurant, 100%, 2 hours, 2.5 hours using FSD, and it drove perfectly through Vancouver, through Seattle. And my friend said, oh, no, I've tried it. It has a lot of problems.
Mm-hmm.
Digging in a little bit more, he had done the 1 month free, but it was like super old, super old. And I said, no, well, I guess you need to check out the new version 13s. Don't use the 11s, version 11. And he goes, oh, okay, I didn't realize that, right? That it's now so it also, that also matters.
That does. Yeah. And then two more here. So then 48% of consumers believe Tesla FSD should be illegal.
Oh, whoa.
Right. And Thomas says this one's kind of a shocker. The fact that almost half consumers believe FSD should be illegal is wild. Getting outside the tech echo chamber in the Bay Area can be illuminating when it comes to views of technology advancement.
Well, where is this question asked? Which state? Do we know?
I'm sorry, which state?
Yeah, which state was this question asked to?
Oh, I don't know. We don't know any details about where the sample was taken.
Oh, well.
Yeah. There's a lot of other bias against Tesla in this report, by the way. We're not covering that in this show. Yeah, I'm just including these here because of Thomas's post. And then lastly, only 10% of consumers would consider letting their personal vehicle be used as a robotaxi. And Thomas's comment here is this one isn't as surprising to me. Part of the huge bull case for Tesla is the argument everybody will lend their vehicle out to robotaxi network. It's a nice thing in theory until the first time your vehicle comes back and somebody, et cetera, in your car.
Again, there's a misunderstanding here, even by Altimeter Capital. So we have patents from Tesla that show that the way the program works is that if I'm got my car and I say I want it to be part of the network, go ahead, go back, but I want you to come back by 5 at night to drive me home from work to my home. It's my car. So you send it off. It first goes to automated cleaning. It then gives rides, comes back, gets automated cleaning, then comes to me. So that is how they're going to solve this issue where no, it's not going to be somebody took a dump or vomiting on the seat, then handing it to you. By the way, Teslas have multiple cameras. They have the cameras inside the vehicle cabin. They know if somebody took a dump in it or vomited in the seat, and they're not going to send it back to you. So I don't know where this.
Yeah, it's again kind of strange. It speaks to I think the bias in the survey, and also I would also come back to economics. If you change the wording of the question, would you consider allowing your car to be used as an autonomous robotaxi if it covered your monthly payment? The answer would be yes. People would say absolutely. I'd be interested in that. So it's all how you word the question, and also even if people initially say no to that, over time they'll get comfortable with it. They'll see other people doing it. Their friends, their family will talk about it and say, "Hey, my car payment is covered by putting my car in the fleet." That's going to
Or
be
I'm
very
making
appealing.
money. I'm no
And
longer
making,
losing money.
yeah,
I'm making money. Like if you say, would you consider allowing your car to be used as an autonomous robotaxi while you weren't using it? Um, no. What if, well, if you're making 200 bucks a month, what if you're making $1,000 a month?
yeah,
It's like all of a sudden it's like, yeah, I don't care if somebody comes back, took a dump in it or vomited to see if I'm making $1,000 a month. Yeah.
right, yeah. So let's explore a little bit then how much that could be. And I think
Yeah.
some of this data could be surprising. Now, this table is from that
OB.
OB report that we talked about.
Yeah.
I converted it to the average price per mile. This shows in a table format on the far left for short trips of less than a mile. Lyft, Uber, and Waymo are getting between $30 to $42 per mile. Okay, in San Francisco, this is San Francisco data. And then for longer trips, if you go all the way to the far right side for let's call it 3 to 6 mile trips, they were getting an average of $4 to almost $6 a mile. These are far higher rates than I think that we are used to seeing for Uber and Lyft in particular. But again, this is San Francisco. This is a very unique market. And then the next page takes this data and puts it in a graphical format for those who prefer the visual. So what I did with this data was say, okay, let's assume that Tesla was able to charge Uber and Waymo prices using the San Francisco data. They're in Austin initially, but one of the next markets could be San Francisco. What would that look like if Tesla put their vehicle in this market? So let's look at that first. And I would be the first to say these are silly numbers, but this is, using real data, right? So I say let's make the bold/silly assumption that Tesla enjoys
Yeah.
the same pricing that Uber and Waymo have in San Francisco
Mhm.
per that report. Okay, so let's take a look at the numbers on the next page. First of all, let's assume that the vehicles use 12 hours a day. Okay, only half the day, right? Rest of the time, it's charging, maintenance, it's just sitting around doing nothing. Okay, and then each of these scenarios is Uber and Waymo over various distances at various prices per mile for each company, taken from the previous table and chart.
Mhm.
Okay, so that's the usage. The next one shows the number of trips they would have each. So on the far left, Uber would have, if it was doing 6-mile average trips, it would be 23 trips a day over those 12 hours, and it would travel 281 miles in blue. And Waymo is the same. And then we've got 4-mile trips, 2-mile trips, and 1-mile trips. So the shorter the trip, the more rides, but the less total distance the vehicle would travel in any given day. Okay. So just to sort of show, those metrics for these 8 scenarios. Okay. The next page then shows the revenue. So you're looking at, on the far left, Uber, 6-mile trips at an average of $460 a mile. That's $235,000 a year for
Per
each
vehicle.
vehicle.
Mm-hmm.
And then on the far right, the Waymo at 1-mile average trips at $1,850 a mile, it's $700,000. The average of all this is probably what, 350, 400,000, something in that range, 450 perhaps. Maybe that, between 4 and 4 and 2-mile trips. So these are crazy numbers, right? For a vehicle that costs what, $40,000-$50,000. Okay. Now I run it through my model of what I think Robotaxi will cost, and I think I've been pretty conservative in my cost assumptions. I'm not sharing all those details in this show just for the interest of time. But on the next page, Herbert, it shows what the net profit and net margin would be under these 8 scenarios. We're looking at 52 to 56% net profit margins, and profit per vehicle on the low end of 123,000 a year, and then on the high end almost 400,000 per year.
Per
with an
year, per
average
vehicle.
per
This
vehicle.
is why it's crazy. I mean,
Yeah.
instead of selling a car and making $6,000, $7,000 one time, then you're done with it. You can make 122,000 per year per vehicle for, I don't know, 5 years, depending on
Yeah.
how many years you think it should last for, or 400,000 per year. This is crazy numbers. Yep.
And again, I'm not suggesting that this is the case for Tesla. I'm just
No.
showing you, based on the data that we've gotten from San Francisco,
Hmm.
this is what each Tesla would make if they were just operating in that market at those prices, given these various assumptions for distance traveled. Okay, so probably $200 to $250,000 net profit range, operating just 12 hours a day. Now, would it be just 12 hours a day? Probably not. They could probably operate more than that if they wanted to. Anyway, but that's just a good conservative assumption. Now, let's just arbitrarily cut this in half and say Tesla enters the San Francisco market, offers prices at half of what Uber and Waymo are
Yeah.
offering.
Yeah.
You still have net profit margins above 50%. You still have profit per vehicle 55 up to $190,000, depending on which scenario you're looking at.
Hmm.
Maybe the midpoint here is 115, something like that.
Yeah, I think the surprise that people are shocked with is that everybody thought that Uber's prices is around $2 a mile
Yeah.
and that Waymo was about the same as Uber and Lyft. Well, no, it turned out that they are charging you $40 for the 1 miles and $5 for the 6 miles. And then, of course, once you get past that, maybe you're going to get to the $2 to $3 range. Well, I see this. I can see that Tesla comes in and says, we're going to be half the price of Waymo and Uber because you guys charge so much money. So even at the lowest amount, we're talking $2 a mile.
Yeah.
And that was what we've always assumed, that Tesla would charge $2 a mile. In fact, lower than that, because we thought that they were undercut Uber, but they don't need to. That's already 50% of what Uber charges, $5 a mile. So I think they might do this 50% off.
So next, Herbert, we're going to look at some real data over the last 2 weeks in Austin, Texas. This is just a map that shows the various markets where rideshare is operating now, some of the players.
I like this map. Let's linger on it a little bit. Can
Yeah, sure. Yep. So we've been talking about San Francisco, where Waymo, and it shows Tesla there. Tesla's not really operating there. They're maybe testing, but we've got Waymo and Uber and so on operating in Los Angeles, Silicon Valley, San Diego, California. We've got, I guess, in Vegas, Waymo and Zoox. In Phoenix, we've got Waymo. Dallas, Fort Worth is a market that's some operating there. I know that Waymo's expanding into Atlanta and in Miami. So it's starting to sort of slowly spread across the country. Also, Waymo this week announced that they want to expand into New York City. That'll be a bit of a process, I think, to get approved there, but they're starting that process. So coming to a big city near you in the next, year or two.
I think what this tells you is that people think, oh, it's going to take forever for regulatory approval for each of these. Well, no, because you already have a lot of AV rideshare operations already happening. You can first launch in Austin, then you can launch in San Francisco, then you can expand into Los Angeles and San Diego and Phoenix and Las Vegas and Dallas and Atlanta and Miami. Oh boy. So it's not like by that point, everybody else has their hands up in the air going, do me next.
And by the way, in states like Texas and Florida, there's statewide legislation. So if you are approved to operate, it's not just in city, in Austin. You can operate statewide.
Yeah, so we've learned now that Waymo only wants to do Austin's proper, but Tesla they've applied for Austin metro area, which is like the broader group. And Austin and Tesla is not restricted by highways like Waymo is, and so yeah, they can basically say, I'm going to do all of Texas now. Boom. So all the cities, they once they got Austin nailed, and they go, okay, we're ready to go. Yep. So
Okay,
it's by
so now
state, really. Okay,
let's focus on Austin. We've been talking about San Francisco, and again, I think that's a very special, unique market for pricing. So Austin's a little different. So I asked the question, what's the pricing environment for rideshare like in Austin? Well, as it turns out, I have a mole in Austin right now. A friend of mine, Ian, has been there for a couple of weeks,
Hmm.
and he's been taking Uber rides and sharing with me the cost, the
Mm.
distance, and everything. So
That's
here's a
great, Ian.
screenshot. Right.
Thank you,
Thanks
Ian.
for writing, Ian. The cost was
Are you reimbursing
$27.
him, or is he spending his own money?
He's
Got to do
his own
certain
money.
research.
Yeah. Right. Yeah. Right. Good point. Um,
Okay.
yeah. So this is Uber, right? And it's showing the total. It shows a booking fee, which is just another fee that Uber tax on that, and the Texas regulatory recovery fee. We'll talk about that, what that is in a minute. That sounds like an official charge. It's not. But here's a ride that was $27. I don't remember offhand what the distance was, but I'll show you in a chart form here in a second. And Herbert, the next page shows another ticket, and this one includes an airport surcharge.
Mm.
So airports get their cut as well. They charge the rideshare companies a fee for coming onto their premises and
Mm.
picking up passengers.
Mm.
Okay. Texas regulatory cost recovery charge. It sounds very official. If you go to the next page, what is this? Well, it helps Uber cover the cost of regulatory, safety, and operational costs. It could include government mandated commercial auto insurance and payment card fees. So it's not exactly a Texas government charge. It's just a way for Uber to get more money out of you to cover some of their expenses.
Mm-hmm.
Okay. Now, a lot of people have expressed some frustration about the transparency of what this is, but typically it's another 2 to 3% of the ride cost. Anyway, so you'll see that on your Uber ticket when you take rides in Austin or anywhere in Texas, I guess. Okay, so just to clear that up, that's not a fee that's going to the government or anything.
I think before I forget to, though, we should mention that the difference between an Uber ride is you do have to tip. Typically, you would tip the driver even
Yes.
more. And Waymo, I guess you do not need to tip anybody because you can walk in and out. And so
Yep.
imagine if Tesla charges one half of what Uber charges. It's more than just a half of the dollar per mile because you
Right.
don't have to pay the tip as well.
Yep, that's a very important point. So here's some data there on the next page. It shows 12 rides. 3 of those were in Waymos. Everything was done through the Uber app, but 3 of the vehicles were Waymos.
Mm-hmm.
This chart is showing the distance traveled on the certain dates, right? So that first one on the left was a 10-mile trip. The 3 Waymo ones were about 6.5 miles, 4 miles, and then about a mile.
Mm-hmm.
And then a couple of longer trips. Okay. So we've got a small amount of data, but still helpful and instructive. So let's kind of dive into this. This is a table that shows you the combination of the trip distance on the y-axis. Okay, so as you go up the y-axis, you go from 2 miles up to 18-mile trips. So he's got a couple of trips there at 15 miles, one at 10, one at 6.5, about 3 in the 4-mile range, a 2-mile trip, a couple other trips. So he's got a good smattering of different distances. And then on the x-axis is the cost per mile. And you can see that it ranges from a couple bucks a mile for those longer trips out to 5, 7, and then 1 all the way at $22 per mile. That was one outlier. Okay. So sometimes you get absolutely gouged when you take a
Surge
ride share.
pricing. Mm-hmm.
Yeah. Okay. And that happened to be a very short trip. It was less than 2 miles he traveled, and he paid 20 some dollars per mile.
Mm-hmm.
Very expensive trip. So when we talk about average pricing, I sort of want to disavow ourselves of that. We need to think of pricing by mileage. And you can see that there's kind of a curve with sometimes some crazy outliers. These rideshare companies typically don't want to do these short trips because there's a lot of reposition time, maybe to go from that to the next trip. They're not really making a whole lot of money. And in some cases, the total cost of these short trips are actually more than the longer trips. But I guess they feel like if you want to take a short trip, then you must be really, you're not price sensitive. You must really need the transportation, so we can gouge you for that. I don't know. The numbers seem very high for these short trips. Okay. And then the next one here is this, the distance, the travel time in minutes So the longest, he had 3 trips between 20 and 25 minutes. The rest of them are fairly short. And this just shows the cost per hour. So the difference in the cost per hour, with the exception of that one crazy one on the far right, was between, let's call it 50 and $100 an hour.
Mm-hmm.
Okay. So, that's quite a bit of money. That's another way of looking at it. I think cost per mile is probably the better way, but just for people that think about in terms of cost per hour, this is kind of an interesting breakdown. Okay. All right. Let's talk now about Tesla's pricing strategy. This post was me just kind of thinking about this, and I'm calling it the Pac-Man pricing strategy.
Mm-hmm.
So initially, when you've just got a few vehicles, you're just another player in the market. You don't need to undercut anybody on pricing. There's enough business for everybody to go around if you're just putting a few vehicles in the market. Okay. And as we've seen in San Francisco, you put a few Waymos in there, you can actually earn a premium price because you don't have to deal with the driver and you don't have to pay the tip. So if they wanted to, in this short period of time where Tesla just has a few vehicles in high demand, they could charge a premium over Uber if they wanted to. Okay. And the way to think about that is if you take that previous chart on the next page, all those blue dots, Tesla, if they wanted to, they could move them to the right. Because there's latent demand for Teslas. People like me are going to be showing up in Austin, Texas to experience this. I'm not going to be as price conscious, right, initially. So if Tesla wanted to, they could charge more. But as they add more vehicles to the fleet, on the next chart, they need to shift to the left. Every single one of these dots shifts to the left. The more aggressive Tesla wants to be, the more they shift every one of these dots to the left. Right now, that far right dot, Tesla may not even play in that market. They may not have surge pricing. They may offer a far more reasonable number if they have enough vehicles. Surge pricing is kind of a way to deal with a situation where you've got so much demand, you can't handle it. Therefore, you just jack up the price until supply and demand come into balance again. So from an economics perspective, I understand that. From a customer satisfaction perspective, it really sucks. Okay. As Tesla scales and puts more vehicles into the Austin market, they can more aggressively move to the left. And they can, basically like Pac-Man, they can eat away at the profits that the competitors are currently enjoying. Okay. If they want to be more aggressive, you put more vehicles in the market, you undercut more, you take over the entire market. Okay. So as I mentioned, as they scale massively, they would put severe pressure on Waymo and Uber. And you would get to the point where their business models no longer work. They would not be profitable. And what will happen is Waymo's drivers will leave them in droves. And for Uber's drivers will leave them in droves. For Waymo, it's just a question of how much money they want to lose.
Yeah.
What's their tolerance for losses? And then, as I mentioned here, ultimately for Tesla, as they continue to scale, you undercut rental cars, car ownership, public transport, and short-haul flights once these robotaxis move from city to city. So I kind of think of Tesla's robotaxi as the Pac-Man of transportation.
Yep.
Okay. It's kind of one way to think about it. And this was an image generated from Google's Gemini when I asked for a Tesla robotaxi as a Pac-Man. That's what it came up with. Not bad.
Good. Not bad.
Yeah. And again, just to remind people, we've probably shared this chart several times now. This is from Uber, their own work in 2022 that showed if they dropped their price per mile down to $1, they would 25x their market opportunity. It's not a linear relationship. Every 10 cents or so you drop the price down, your market expands more and more and more. And it's not linear. It's an exponential kind of a curve. And then they're showing even beyond that, the opportunity is absolutely enormous. That's what Tesla's going after in the long term, is the ability to drop the cost per mile way down, probably beyond that dollar per mile range. But in the short term, I'm here to say that their pricing actually may be pretty juicy until they can scale the business.
Well, the good news is what you showed us is that Uber, Lyft, and Waymo are charging what's the exponential juicy, crazy juicy. So
Yeah.
even though Tesla charges higher than you realize, it's not going to be as high as the others. Just crazy.
That's right. Yeah. And by mentioning, I guess, the word juicy, I stole the thunder of Gene Munster. And he put out a piece this week, Robotaxi is a juicy opportunity. How much juice? And my post was Robotaxi more juice than Gene thinks. But overall, I would say that he's directionally, I think, in the right place. But I think he's being pretty conservative in his numbers. So in the Herbert, if you go to the next slide. So he's suggesting that if well, my first critique of him was that he's kind of stuck on the rideshare market as the market opportunity for Tesla. And as we just discussed, it's far larger than that. And the rideshare market, as they drop prices, will expand quite rapidly. But he's saying by 2030, if Tesla offered rides at a 10% discount to Uber and Waymo,
10% discount.
Yeah. He thinks they can capture 30% of the US rideshare market.
Yeah.
Okay. If they captured, well, I guess if they capture 30%, then it adds about 11 billion in operating income and increases overall operating income by 40%. If they capture 70% of the rideshare market, it would add about 25 billion to operating income, and they would increase their overall income by 94%. And again, he's got his assumptions there in terms of the growth in the rideshare market. And so I think he's being extremely conservative there in terms of what he's looking at for market opportunity.
This is 2030. 2030. Yeah. That's 5 years from now. How many cars? What price point?
Yeah.
10% lower. Okay.
Yeah. I think it's likely to be far more than that by then. And then he's got a couple of ramps in terms of fleet ramps. So he's got a conservative and an aggressive ramp. Right. He thinks it's going to be 4 years before ride sharing is dominated by autonomy. Below is our best guess of what the conservative ramp will look like in terms of percentage of rides that are autonomous. So he's saying by 2030, 30% of the rides will be autonomous. Mm-hmm. So that's his conservative. And then the aggressive ramp is 70% of the rides are autonomous by 2030. Just for the rideshare market, which is pretty small in the whole scheme of things. And then he's got some numbers here for Tesla owners and what he calls small business fleets. So for Tesla owners, he says, my sense is only a small percentage of the 7.7 million eligible Teslas will opt in. And he says, that's okay, because my math, only 17% or 1.3 million vehicles need to opt in to service 70% of the market. Okay, the pace of Tesla owner buy-in to the fleet will depend on the economics. I totally agree with that, and I think the economics are better than what he's showing here. He's got the car working for an average of 4 hours a day, 3 days a week. Okay, maybe, but if you're making money, why would you only limit it 3 days a week? Now, this is an average. I suppose some people would do 7 and some might do 1, but that seems very conservative to me. He's got earning $20 a ride, 2 rides per hour. Okay, fine. Tesla's take rate at 30%. That's not unreasonable, and so on. But he's got yields annual before tax income of $10,000, just working 3 days a week for 4 hours a day. That's not bad. I think a lot of Tesla owners would be quite happy about that. Mm-hmm. Again, in this scenario, that would probably cover the car payment for most people.
Exactly.
Right. And if you could make more money doing that, then you would. And then the second scenario is the small business fleets, where he's got a fleet of 5 cars, and he's got total income there before tax of $275,000. That would create a very interesting incentive for a lot of people to buy some Teslas, create a little flock, and make a bunch of money. Mm-hmm. So,
Okay.
but the good news is that, Gene Munster and the rest of his Wall Street colleagues seem to be coming around to this idea.
They have to. They're the eve of, they finally come out with their Robotaxi plan.
Yep.
That's what we always said. They have to wait and see until it's out, and then they'll put it in. Chasing. Okay. That was great. You came with actual data from feet on a street, right? Testing cars. You compared all the prices. And at the end of the day, what it does is that we're both shocked that the price of these guys can make so much money. And so it speaks to two things. One is that if Tesla charges what they do, you got to redo your forecast, even higher weird ramps. But if Tesla charges what they expect to charge, $2 a mile, these guys are dead. It's as simple as that. So,
yep.
Price war is coming.
And Tesla can charge $2 a mile once they've scaled. If they do it too soon, they're going to have a demand problem. So they do have to price within the market, and that's why I'm saying I think initially the amount of money that each Robotaxi can make will surprise us on the upside.
Okay. Thank you so much, Cern. Appreciate that very much. Follow Cern on his X account at Cern Basher. See you soon. Bye, everybody.
Thanks, Robert.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.